When I saw the chocolate, and we have the chocolate as well in the bank, they make you always think, because most people want to have this little chocolate from Tony Chocoloni. They take the blue one because they like the milk, but it's always the other way around. The red is milk and the other. So he makes you think immediately, why do they use this color? Create some consciousness, that's nice. When I was listening to Adrian, I thought about one of the founders of our bank, who explained me how it worked with price, how it works with interest rates. That was Rudolf Mees, who was born in Rotterdam from a famous family of bankers, hundreds of years, Mees and Hope for the Dutch people. And he was one of the founders of the bank. And he told me, there is a funny thing with interest rates. The more people are interested, the lower the interest rate. And that is a law. That is a law. There's a very interesting social economic law that the human interest in things, becoming interested in things, actually has a sort of reverse effect on the level of interest rates. And I know that when we started the bank in 1980, we offered savings accounts with zero interest rate. Actually, people could choose the interest rate, which was fascinating to see what people did. And in 1980, when the bank was founded, interest rates of saving accounts were between 8 and 10%, just to give you an idea how much inflation we had at the time. And we offered that the possibility, and many people said, no, I accept a zero interest rate deposit, because I like what you do, I'm interested in what you do, and therefore I help you with that. And in a certain way, that's still the case. It's an interesting, I would say, new economic law, what I never learned in university, and never learned, because I learned exactly the other way around. So it's quite interesting to have that law. I will speak about fair banking. Well, this is a sort of strange word today, exactly when you were reading the papers this morning and saw that one of our most fair banks, I would say, Rabobank, because that was their image and that's in their roots. I mean, the cooperative banking movement is a very, very important movement in the Netherlands and worldwide. They were confronted with this terrible thing with LIBOR. And it didn't feel good at all. I felt really sorry for them, especially for all those Rabobankers who are sincerely trying to service locally people in banking. But it happens, and that is one of the, I would say, phenomena of today, that it happens to many banks, to many big banks, and there is a reason for that. But before I go into that, I would like to elaborate a little bit on the terminology, on fair. What is fair, actually? And when can you call something fair and when it is not fair? Because it's a very easy word we use. And can you measure it, for example? I don't think you can really measure it, fair. But maybe you want to challenge me on that. Maybe we can measure it. It's the same as Adrian actually said about true pricing. He said it's not an exact science. He said it's a guess. It's where you go to. You try to find out what is sort of true, sort of a reflection of the price. But it's not like science, a natural science. And that's important. So how you define it, how can you recognize it? I think that is quite important for fair. I think it's a people thing, fair. If you think about animals, plants, nature, is nature fair? I don't know. I don't think it's so much fair. It is what it is. And it can be beautiful, it can be inspirational, but in itself, I would not call nature fair, or an animal would not call it fair. And that's interesting, but humans, when humans get involved, then the whole notion of fairness comes into our thinking. So I think that's an important thing to understand, that fair is not a natural thing. Fair is something what we have acquired as human beings, as mankind. And that's interesting. People are only part of nature, I think. Of course, we are nature as well, as we all know. We have a physical body and it works according to biological laws. Yes, we are part of nature, but at the same time, we are not. We can also free ourselves from nature. We can think independently. We can make free choices. Some people doubt if we have a free will. Others say, yes, we really have a free will, but the fact that we can discuss that is already quite fascinating. So it's not so much about do you have a free will or not. The fact that we can discuss it is a typical human thing. I think that's quite important. So we are part of two worlds. We are part of the natural world with its laws, with its instincts, with its desires. It's about eating, it's about reproducing. And the other side, the other world, is being part of a cultural world. Creating something out of nothing. Creating something out of nothing is a typical human aspect. And I come to a conclusion later. Wait. I learned that from you. You have to sort of build in cliffhangers. That's good. That's good. So we sort of emancipated as humans being from nature in a certain way. We became almost too independent from nature. We thought we could create everything ourselves in our thinking, and we forgot a little bit about nature. And I think the interesting thing of today is that we realize that the foundation of our life is actually in nature, in our planet. But for a long time it was possible to sort of do away with nature. The planet was always there, it was a given thing, and we thought almost we could do without. And the same thing happened to bankers. They thought at a certain moment you could make money with money. And maybe in a business school they learned you differently now, but in a long time people really thought you could make money with money. And you cannot make money with money. That it doesn't work. If you are in banking, you know you can't. And the moment you start to realize you can't, the whole thing implodes. So it's a sort of belief, a religion that you can do it, but at the moment you say, but who is actually going to pay for this? Or where do I get my food, my thoughts, my housing? Then it comes back again. So that is the interesting thing about the separation of nature, and we come now back in a moment today, this time that we realize that is an important foundation. And what is, I think, even more interesting, that we realize we are not dependent on nature, but nature is also dependent on us. That's a sort of interdependency, what is relatively new in the history of mankind. And in that sense, an element of fairness comes back. Our relation with nature, our care for the planet, I would say, has to be fair. What we take, we have to give back. The circle economy concept comes from that. I think it's quite important that we take that as the new paradigm in economics. That we make clear that if we take something, we have to give something back. Nature is not a given thing, it's part of the circle now. That's new. That's one development what led to, I think, the consciousness for fairness. The idea that fairness is an important idea in our economy, in our society. The other one is that we created a much stronger social consciousness. I think the really old consciousness, social consciousness, was about a family, children, man and wife. That was the base. Then the tribe came, and then the community came, and then the nation states. And it's not so long that we have a consciousness of a world citizenship. When I was studying in the 70s, the whole idea of globalization was not there. We talked about nation states, about blocks, but we didn't talk about world citizenship. And today that's really happening. And that's a fascinating new, I think, concept, what also creates a consciousness for the interdependency between people. We are really dependent on people living in China, in Latin America, and North America, and they on us. We are one world economy, we are one world community, a world citizen. That's again has led to the whole concept of fairness. That we know that if we do it, what we eat is something what you cannot eat in another part of the world. And one of the other founders of the bank, Professor Brühl, who was a very philosopher, he talked to me, do you know what the average income is of a world citizen? Do you know what is the average income? If you take GDP and divide it by, what is it, 6 billion people, it's today $12,000. I thought it was less actually, but it's $12,000 is the average. In 1980, the average was $3,000. So it was an interesting step up we made since then. And he said, actually when you would earn, and now I take 2012 terms, if you earn, let's say, $48,000, you have to realize that actually 4 people are working for you. Take that as a sort of concept. And then you create this whole network of interdependencies. And we sometimes don't realize in this part of the world that many people are working for us who have less than $12,000 per year in income. I think that's an important notion what is supporting the whole idea of a fair economy, of a fair banking or fair trade. And maybe there is a third dimension to fairness, to the whole notion of fair, and that is, I would say, a more ethical, moral notion. Because the 2 I mentioned, there is a sort of almost ecological law or a social law behind it, but I also feel that stronger people do things because they believe in it. It's not because it's happening socially, you care for your mother, you care for your community. It's something you strongly believe in. And I think the third basis for fairness is a moral, ethical ground, what is becoming more and more important. And if you lose that part, it's very hard to be active, to work in the economy, particularly in banking. So, for many centuries, we thought that this whole notion of fairness has nothing to do with economics. Economics was a sort of physical law almost, how things happening. And Adrian mentioned already the whole idea of markets who produce an objective price. That was the sort of thinking we had. The price was something what creates an objectivity. And I think it was almost like the price has no quality. It was not true, it was not fair, it was not high or low, it was what it was. Like I said earlier, is nature fair? No, it wasn't. Is a price fair? A price is what it is. And we have to accept it. That sort of thinking was almost a mechanical law. The price is what it is and we dealt with it. And I think today we learn more and more that the price is something different. A price, you can only understand a price if you understand the context and the relationship. Relationship is the whole time element. How do we come from here to here, and at a certain moment a price has been created. Actually, I think the price in itself is not so interesting. It's one moment in time that a certain price happens, but the next moment the price can be different for the same good, for the same product, because things have changed, the context has changed. So to understand more and more the context in which a price is emerging is quite important, and the relationship becomes much more important. And that's where I agree with Adrian, the modern technology comes in. The modern technology, social media, can make us understand much better what that context is. In the past we couldn't. We just bought something in the shop and we didn't know actually where it was coming from. The price was the price. So there's a unique possibility now to get a better understanding of what the price is about. And then we make a price more qualitative, not just a quantitative measure. Now we are coming, and especially in finance, in banking, still we are dealing with the results of this almost sort of physical thinking about prices. It's a mechanical thing, and we have to learn to wind back a little bit and understand, or wind forward, I would say, and understand much better what a price is, and that you only can understand price in a context and in a relationship. I think that is also the way how we come out of a financial crisis, but exactly that's what happened in the financial crisis, that we didn't put things in perspective anymore. We saw the price as something objective, and that was true. And that true could not be any more connected to what the real context was. So that's important. So therefore I think fair trade, fair banking, fair pricing or true pricing is something of today. That is what we have to do today to have this broader picture again. When I saw the title, and the title was sort of given almost fair banking because of fair trade, and I thought this is a nice title. I would never call ourselves a fair bank, but I was challenged by that name, and I thought, well, let's see where we are with that. When I became involved in banking, I had no idea what a bank was about. To be honest, when I was 16, 17, I had not this dot at the horizon, I want to become a banker. No way. I hated banks. Banks were capitalists. They did wrong things to people, and I didn't like it at all. What I did, and there is my relation with also fair trade, I created in my high school a small third world shop. And there I learned my first lesson about accumulation of capital. Because I borrowed a little bit of money from my parents and bought some fair trade coffee in, I think it was Mozambique then. And that went to the Christian movement there, and we could buy that, and I was selling them in the school. It was quite a fight because this school was a very conservative school, and I was seen immediately as the communist working for the Russians, and so I had to find my way in, but I liked it actually, and I was selling all sort of artisan products and coffee and everything else. And I paid back the loan to my parents, and suddenly after 6 months I realized that I had 500 guilders then, and I had no idea who owned that 500 guilders. Was it mine? Was it something what I maybe stole from the farmers in Africa? Did I charge too high prices? There was the question, who created this 500 guilder? That was my first question about capital. Not about capitalism, but about capital. And I had to deal with it. And I thought, that is interesting. You can create something and call it capital, and there is a moral responsibility to do something with. Well, I was then very interested in the initiative of Triodos Bank, what started to bridge, to create relations between people who had money and who needed money, and I became a volunteer there and started in that way my bank career. Still, I had no idea that I would become a banker. I was thinking I'm working for this nice initiative for a couple of years, and then I do something else. I'm going into maybe a nice organic shop or something else, but not banking. I didn't like it at all. Still, I think Triodos is an interesting example where if you really focus on the real economy and what people want to do, and that's part of your culture of the bank, what is incredibly important in banking, that you create a culture where you really are focused on who you want to serve. And that is so regrettable that this happened to Rabobank, but I think some of these elements are very strong in Rabobank as well with their local cooperative banks. I think that is the way you have to do banking. You have to develop a basic serving attitude in banking. It is the entrepreneur who creates the value. It's not the bank that creates the value. In the best case, you are part of that value creation process, but you are not directing it. You are the bridge between people who have temporary money available and people who temporarily need money, but the real value creation is with the real economy. If you now look at fair banking, how could you describe fair banking? How did it develop? I would say there are 3 levels in fair banking. And I would say the first level is about transparency. I think a first level is transparent banking. You need to be transparent before you can actually act in a different way, in a fair way. Transparent banking wasn't there at all in 1980, and it's coming more and more into the public domain. People can see it. Banks have to be more transparent. We suddenly discovered that it was a great idea to use Google Map technology to show all our borrowers on the internet, our Google Internet application. And actually our depositors love it. They go and they see, well, which borrowers are actually in my neighborhood. What do they make? What do they do? And you can find it on the internet. You can go to our internet site. You can see it. And it was actually almost by accident we did it. And we learned from that that people really want to know, have an interest in what their money is doing. So that transparency is fundamental. It doesn't change the world. It's maybe still not about fairness, but it is a very basic condition for creating fairness and creating value. The second level is, I would say, real fair banking. And what I mean by fair banking in that sense that you go beyond where your money is used, but also how your interest rate is actually earned. Because people want to earn an interest rate on their deposit, not too much today, because there's far too much money in the world, and not enough entrepreneurs. That's why we have such low interest rates. But I can really see that it's important that you not just say, where is my money working, but actually how is that entrepreneur earning also for me? So the earning capacity of a business has to become much more important. And you can see that people actually are interested in lowering their interest rates if they see what's happening with their money, if they can understand how that entrepreneur is creating a business what also can benefit them. I think the third level is when you use your money for positive change. And I would not say that all our 500,000 customers in the bank, we have about 500,000 customers at the moment, that they all go for this positive change. Some of them just like the transparency. There's another group who really likes this whole sort of fair banking idea, that there's a fair price, a fair interest rates. But there is also a group, a growing group, who want to use their money for social change. So see what you can do, become part of a bank that want to change the financial system. And that group is growing. So you see different levels of consciousness. I want to conclude with some strategic questions, because many people say, as you have a nice banking model, a nice business model, how can you scale it up? It has to be big. And there's always a big question. It has to be replicated. Especially our American friends love that. It has to be replicated, scaling up, then you are successful. And that is an interesting question. Can you so easily replicate and scale it up? And what are the sort of strategic ways of doing that? We found out in our organization that a sort of growth path between 20 and 30%, what we have done in the last, I would say, 20 years, is something we can manage as an organization. There's almost an ecosystem in the bank, a social ecosystem in the bank, what can deal with that growth. We learn how to deal with that growth. I think I would be very disappointed if it would be 0 or 5%. We have really an issue to deal with that. But 50 or 100% would also really create some challenges. So you find in an organization a sort of rhythm of growth, an organic growth. And that can, for some organizations, between 5 and 10%. Probably if you're bigger and if you're smaller, you grow a little bit faster. That's an important sort of lesson to learn. And you should not try to blow yourself up almost in growing too fast. But at the same time, what I also learned, there are many other initiatives like Triodos Bank around the world. And at a certain moment we said we are not growing ourselves immensely because we want to change the world. We are going to line up with others. And we created a global alliance for banking of values. Organization created here in the Netherlands in 2009. We are now with 25 banks worldwide. And it's fascinating to see how much we can learn from each other. And it's a CEO club. We didn't want to make it just a club of banks. We wanted the drivers of those banks, the final responsible people, to come together. And we try in this global alliance to create a better understanding in the world of what fair banking is about. And what I learned very much is that if you are just one bank and you try to be an example, people say, well, that's great, but maybe that's the exception. If you start to create a group of banks who are working out of the same values and are successful, then suddenly others start to think, this is maybe something interesting, we should look into that. So that's a lesson, just not make yourself big, make yourself big with others. This network principle. I believe we're going to an economy who is much more network-based. It's much more about know-how, not having big, heavy organizations. And many of, for you probably, that is already a given thing. That is not about being in a big company, but being in a small company and relate to each other. That is the future, I believe. I don't think there will be very big banks in the future. There will be very efficient banks with very efficient networks of different know-hows. But I think the big institutions with all the internal bureaucracy have not a real future. We have to stay much smaller and work together. But that's maybe an interesting debate to have. And that's why I think this sort of relationship approach, this more horizontal approach, connecting, making things work, is something what has to do with fair banking, with fair trade, where also the relation is with producers, It's actually relatively a small movement still, fair trade, and still they are global. And that global concept, I think, is quite important and can be a source of inspiration for other companies as well. So my picture of the future is about understanding better the context of relationships, keep it more horizontal, look at situational cooperation, and I think then we have a completely different economy, a completely different society who will be much more fair than the ones of today. Thank you very much.